What would you say was like a catalyst to get you from you being green to you being where you are now?
The biggest thing for me was just learning the trade, was learning how to deal with clients on the phone, learning to understand different personalities. I mean, that's a big part of this industry in general. Is the more that you can understand how the human mind works or how people are feeling, the better off you're going to be. The least amount of stress that you can cause them, the more they're going to remember it being a pleasant experience versus a negative experience. It's kind of like, I'm going to hold your hand throughout the process. Just trust me, follow me, let me guide you. And, I'll go at whatever pace you want to go at, but just let me know at what speed you want to move at. And that's the speed I'll go at.
Guys, I have a very special treat for you. I have Matt Oliver here. He is the number, I believe, 13 ranked mortgage broker in the entire United States. Is that right?
I think so. Honestly, I didn't look to be.
I just checked the Scotsman Guide rankings, which we both know is kind of the tell all be all with that. That's awesome. So obviously, you've had a lot of success. Being the 13th ranked mortgage broker is not just a big deal, but I think it's even an even bigger deal this year because it's a down market. I think it's that much more impressive, right? If you were to ask me, hey, would you rather, have it in 2020 or now? I'd be like, now. I think it's more impressive, right? To be.
Well, it was going off 2022 numbers, but those were bad. It was a bad year for everybody in general.
Yeah, it was. So I'm always curious to know, especially, I have a lot of mortgage brokers, loan officers in my community. We actually did an interview last week with Tuan Nguyen. He's like the number 2 guy, CEO of Loan Factory. And I always want to do the same thing. I want to know the origin story. How did you become where you are now? Let's hear it from the beginning.
So from the very beginning, I actually started at Chase. I was doing on the Chase side, so retail in this world, doing HELOCs, home equity lines of credits, at a call center out in Tempe. I actually met, who is now my wife, I met her at the Phoenix Open in 2005.
That is, by the way, for all my viewers, the Phoenix Open is the best time you'll ever have. I've been going every year for the past 10 years. It's amazing.
At a golf tournament, no less. The best time at a golf tournament.
I have yet to see a round of golf, by the way.
Yeah. I've only watched maybe 3 or 4 hits, 3 or 4 swings in probably 15 years.
Yeah. That's awesome.
But yeah, so we met there. And we reconnected. We met there and then connected in the summer. And I asked her, what do you do for a living? And she said she works for a mortgage broker. And the funny comment at that point, she was giving me a little bit of insight on it. And I said, why would anyone go to a mortgage broker? Why wouldn't they just go to Chase or Bank of America or Wells Fargo or anything? So it was kind of funny at the time because looking back now, all we talk about is go to a broker. But as a 25-year-old, you don't understand what a broker is versus you're just walking to a retail bank per se.
Right.
So yeah, that was in 2005 when we connected. And then her dad had actually started Lund Mortgage back in 1999. Lisa started there maybe 2000, 2001, something like that. They asked me to come over I started October of 2007. And so what had happened is Lund Mortgage kind of did a reshaping of how their company was being run. And they turned it into a little bit more of a quasi call center with me and one other gentleman that were taking radio calls. So we advertise on a few different radio stations in Arizona. And that obviously drives the calls in. We take the calls from there and the loan gets processed from that point forward. So it is a little bit of a call center type environment or type feel, even though we got 12 employees. So I started over there in October of 2007, which was a great time in the mortgage industry to get started. Because, what was it, January or February of 2008, the whole world was starting to fall apart in the banking sector.
That's what I'm telling people, especially now in this market that are getting in. I'm like, you're actually getting in at a great time because you're going to get some thick skin.
Yeah. It could have been worse if you started in the beginning of 2020 and you think
you just used to be an order taker, right? For the refinance boom. Exactly.
Yep. So yeah, I obviously 2008 was pretty rough, but we get asked that question a lot. Like, how did you guys survive 2008? And I tell people from that point forward, I didn't have anything. I didn't own anything. So I can't lose anything if I don't own anything.
Right, right.
So it was easy to make it through that. But that kind of shaped the whole career moving forward, was just seeing the wild swings that this industry has. I mean,
Yeah.
when the going's good, it's really good. But when the going's bad, like now, it's really bad.
Right, right. Well, somehow, I mean, you've managed to be, ranked 13 in the country, right? In a down market, which is really, really, really impressive. I mean, when we have loan officers, it's so funny because there's just such different skill sets across the board. It's like, some people actually know what they're doing, and it's surprisingly there's a lot who just have no idea what they're doing at all. What would you say was like a catalyst to get you from, just you being green to, you being where you are now? Like, what's the main catalyst? Is it being more efficient in your back end operations, or is it the stuff that you're doing on the phone, or is it the stuff that you're doing off the phone? Right? What do you think is the main catalyst of helping you become the third? Because that's a lot of volume.
Yeah. Yeah, no, well, obviously, more than anything, it's a tribute to the team. We have a solid team here that we've been together since probably, I think, 2012 or so. So it's really going back to like a football team mentality. We all know what route each other's going to run, or we all know how each other's going to react. So that helps us close a lot more deals that way. But I would say that the biggest thing for me was just learning the trade through, honestly, a big company like Chase. From my particular point of view, was learning how to deal with clients on the phone, learning to understand different personalities. I mean, that's a big part of this industry in general. Is the more that you can understand how the human mind works, or how people are feeling, the better off you're going to be. So, you can juggle some of these tougher clients that are nervous from the get-go, or stressed out through the whole process. I mean, the least amount of stress that you can cause them, the more they're going to remember it being a pleasant experience versus a negative experience.
Totally. I totally agree with that. And what I tell our loan officers is, like, I say, hey, these people, because they'll get on the line with me, right? And they'll be like, oh man, I talked to this person and he told me he wasn't interested. I go, listen, do you think he would click on an ad if he wasn't ready to move for another 6 months? Like, it's no different than when you walk into American Eagle, the sales associate comes up to you, he says, I'm not interested. The main thing with these people and their lack of commitment on these calls is they think that if they get on the phone with the loan officer, it means they have to move tomorrow. So I'm like, you just got to kind of like put them at ease and let them know, like, hey, it's okay.
Yeah, it's kind of like, I'm going to hold your hand throughout the process. Just trust me, follow me, let me guide you, and I'll go at whatever pace you want to go at. But just let me know at what speed you want to move at, and that's the speed I'll go at. So I think that really helped. That really helped a lot transitioning into this role. But also just understanding, I think a lot of loan officers in today's world forget that you are your brand. You, as a loan officer, you're the brand. The two most important things right now is brand and reputation and brand are the two biggest things. I guess those go together, but I was trying to think, I lost my train of thought on that, but it was going to be, your brand and your database. Those two things are the most important in today's world. And that's how you could continue to do a lot of volume. That's the big thing.
Your book of business essentially is what you're saying, right? Building that book of business. I mean, how many years have you been a loan officer?
Well, since October of 2007, so we'll be approaching 16 years here in October. But that was the big thing up front that I got taught when I first started. It was the brand reputation, all the same thing. Don't burn any bridges. Don't try not to piss off any clients. Just understand that they're all going through a stressful time, and it's your job to carry them through to the finish line. So, if we treat every client like family for the most part, then your door should always be open. You should always remain successful. And that's really a thing that Lisa's dad and Lisa kind of instilled into the company was treat everybody like family. And as long as you're doing that, your door should always stay open.
Right. I don't want to be your mortgage broker right now. I want to be your mortgage broker for life. Right.
Yeah. We literally say that to everyone. And so that may take, sometimes you're cutting your commission, or you make no money to get the deal done, or you help out a $50,000 loan. I mean, I don't have a great story on a small loan, but Lisa's dad did a $50,000 loan for someone that everyone was passing up in 2005 and 2006 because it was the money was real good at that point. But he did the loan, and his biggest loan after that was a $2.5 million one because the lady referred this person to Stan. Stan did the loan the client came to Stan because he said, you took care of that lady at $50,000. I'll give you my loan just for that story in general, or for that cause in general.
Goodwill compounds. And I think that's in any business, goodwill really compounds. Like, for example, with us, we have, and I own a software company, and essentially what we do is we teach loan officers how to generate their own leads at wholesale cost. So I don't do any outreach. The ones who push our product are our customers.
Yeah.
They push all of our products. And I think that's a testament to the product, but also to the goodwill. If somebody needs me, I'm there. Like, I'm on the line. No problem. Right. That stuff really, really, really matters. So I think that's important. Do you guys have like a specific, a strategy to kind of hone in on your referral network, right? Like, how do you guys go about getting referrals? Or if you're on a call with somebody, is that what you're focused on? Or are you focused just on closing the loan? Or are you focused on, hey, how do I cultivate this relationship so that their cousins and aunts and uncles all work with me as well?
Well, I think there's a combination of it. Just treating them like that in a lot of ways will lead to more deals down the road. But also, we get people that'll call in and we're giving them financial advice on random things. So you're kind of trying to be the financial connoisseur, if you can, within your licensed requirements, or allowability rather. But we try to be the sort of the financial guru for them. But more than anything, we do try everything we can to get to know the clients. Obviously, you can see in the background, I have some Chiefs helmets. I've been a Chiefs fan forever. But, if I get someone that calls in and we start talking sports and I find out they're a Raiders fan, you start razzing them. You have fun. It's like, you're talking to a good friend like that. Those are things that they're going to remember. So I try with every client to somehow pull out a little bit of a memory, or do something that
research before the call.
Well, I think it's more listening a lot more while the initial call comes on, because a lot of times the loan officers may want to overtalk or overspeak or want to guide the conversation. I let them spill their guts to me in the very beginning to try and pick apart things there that I can use to our benefit together as client and my relationship. So, the other thing with that is going back to the database is making small notes. This person has 3 kids. He's a fireman. She's a teacher. He's a Raiders fan. Like those kind of things go a long way. So
then
when they're calling back in.
Yeah, no, that's
back in, you're saying how'd the Raiders go, or how are your kids doing? Those kind of things. Taking good notes.
Right, and you hit the nail on the head. That's exactly it. I mean, I think this is probably the most profound things that our viewers will take away. It's like, people don't like leaving notes. They don't like being in the CRM and doing the boring work, but it pays dividends, especially over a long period of time.
Well, in a down market like this, it's like, get all your systems in order, get ready, because it's coming again. There's going to there's better days ahead for sure. I mean, especially with people locking in at 6.5%, 7%.
Much worse.
You're going to get them at 5.5%, and then you could possibly get them at 4.5%. I mean, so there's potential 3 more deals in this one. So, take advantage, get all your technology systems in order, and be ready when the tide turns here. But I do think those notes are crucial. I mean, I literally, we still get people that call in and say, hey, I'm John Doe. Do you remember me? And I got to say, no, give me your address. And then I pull it up and you read a little bit of the notes and they're like, oh, you do remember. It's kind of weird, but they do. They think you remember.
Right. And that means a lot. Like, as a consumer, think about it. Like, you don't want the person taking care of your loan to not even remember who are you? Like, it's like, dude, we just had like a 30-minute conversation. Are you serious?
I told you everything.
Right. Exactly. And there's something to be said about that. Because if they don't remember, even if they go forward with the loan, let's say, and you still get the deal done, they're not thinking, oh, I want to refer this guy to somebody else. He didn't even freaking remember me. I'm just a number to him.
Yep.
Right. So I think, that's probably the biggest takeaway so far. I think, especially for our viewers, is leave detailed notes, not just on the loan situation, but their personal
everything. Life. Yeah, everything. I mean, we do see, obviously, in today's world with social media being prevalent in all of our lives. I mean, we've seen some times where a client had a family member pass away, or unfortunately a family member, something like that. Occasionally we'll send some flowers over to them or something. I mean, those kind of things go a million miles down the road, beneficial to you. And we're not just doing it just to do it for the business. They may never call me again, but at least I made them feel good during that day. So it's not always about the business side of it, but you maybe put a smile on their face because they're thinking, who is this random company just sending this to me? you
No,
know?
it's you're absolutely right. I mean, when I don't own a lead gen company anymore. I used to own a lead gen company, and you're talking about refinance leads. I'm sitting on over the past 4 years, I'm sitting on 180,000 home purchase leads. So I can't wait for when this refinance boom happens because it's gonna be like the gold rush, right? So I'm
Well,
excited.
that's one of the biggest things that I try to tell people in today's world too, is it's the data. Collecting the data is so powerful. I
Yeah.
mean, obviously from 2020 and 2021, the company together, we did probably 4,200 loans as a 12-person shop. Again, that's a huge testament to our team. But that's a lot of data because there's still, maybe 1,000 or 2,000 people that didn't do loans or whatever. But now I have 6,000 names in 2 years. I mean, that's powerful.
And they're at higher interest rates, all of them. All right.
Yeah. Well, no, they're at lower ones, but I'm saying in the good days, right in the 2020 and 2021,
got it.
Collecting that much. But yeah, right now, everybody that you have now is a potential 2 or 3 loan transaction down the road.
Right. And were you one of those people that was kind of hurt when after the refinance boom, at least what I found from the loan officers that I was speaking to is everybody was like, oh no, I wasn't focusing on home purchase business at all. So I'm screwed. Right.
Yes, that's what we
refinances anymore.
We were that way because we've always been a lot more direct to consumer. We've definitely been more refi heavy versus purchases with the advertising on the radio. But I was a little bit more hopeful that we would just change the narrative on the radio to go more purchases. But then the ultimate storm hit us with not having enough supply of homes in general, and then rates creeping up as fast as they did. I feel like we're in the pain that everybody else is. We're doing more purchases now than we usually ever do. But it's still not enough for typical business. It is what it is right now.
But you'll be more prepared for the next drop, right? Next time the housing market has a problem, you'll be more prepared because now you are building that home purchase business, right?
Yeah, but I mean, it's just having a different business model. I mean, the direct to consumer is a lot different than having the realtor relationship type business.
Right.
I wouldn't say we never really totally drop purchases off, but if we're advertising on the radio or marketing, 90% of our marketing in 20 and 21 was to refis because it was just easy.
Right.
But in a typical market, we're probably marketing wise, we are probably 60-40 or 70-30 refi heavy. But the best part of that on our end is trying to convert the realtors to partner with us, because if I'm advertising that call us first, get pre-qualified first, then I can hand out the leads to the realtors. So I would wish our industry as a whole would try to change that narrative where we were all preaching, call us first to get pre-qualified. Call us first before you do anything else.
Yeah,
if we all said that.
Yeah, consumer doesn't want to do that. You want to buy a house, what do you want to do? You want to go on Zillow? You want to do the sexy thing, right? You want to go look at all the cool houses and daydream about you in that house. It's funny how that works.
Well, my wife literally did a video on that, calling it sexy and not sexy. The sexy part's looking at the homes, not sexy is dealing with us for the first half hour or whatever. But I just think that's an important part anyways, because you're right. As consumers there, I want to look at homes before I go do anything as well as a consumer. But if we all collectively put our heads together and said, if we were all preaching that narrative, then maybe we could tide the turns a little bit or change the tide a little bit.
It's tough to change narrative, and it's really tough to educate the market, especially this market. Most homeowners are oblivious to how it works at all. They don't even know what a mortgage broker is.
No, that's been a conversation that's been fun over the past years with the market share picking up.
Right. It's like, dude, you need me.
Yeah.
Yeah, they don't understand that. It's no. I just thought I dealt with the realtor, and the realtor takes care of everything. It's like, no, that's not at all how it works.
No.
Yeah, you definitely need guys like you. I mean, when how many employees would you say you guys have at your operation right now?
There's 12 right now. There's me and another gentleman that take a lot of the phone calls, and then we have a guy that's kind of for backup, kind of / all around, helps everybody. Mm-hmm. And then 2.5 processors, you could call it, right now, and then just kind of some other ops assistants around it.
You guys are doing pretty good for 12 employees. Like for example, Tuan, he had like 100 processors or something crazy like that. And you're only a few spots behind him. So that's really, really, that's really impressive. So I know you were saying, like, you had mentioned the radio a lot. Has the radio been your main source of advertising, especially locally in Arizona?
Yes, yeah. From the get go, it's always been that. But going back to the conversation, trying to retain a database or to create, to keep a database pretty solid. I would say right now we're probably at 40 to 50 radio, and the rest is coming from referrals, repeat business, realtor relationships that we've created. Right. But we've really changed that, because I would say back in like 2011 to 14, it was probably the radio was generating like 80% of the business for us.
Right.
And we've kind of narrowed that down a lot more by focusing more on the technology or the tech tools that are out there to retain the clients.
Right. Right. No, that's really interesting. I think, well, so far, you guys are the only brokerage that I've talked to, or lender that I've talked to, that is utilizing radio that much. It's tough. Probably why you're seeing a lot of success is because not many other people are doing it. So it's the same kind of thing with like mailers. It's like, well, let's send out mailers. For us as a marketing agency, we're like, loan officers send out mailers. Why don't we send out mailers? Because I don't think any other lead gen companies are sending out mailers, right? Was that kind of your approach there? Kind of like, hey, let's go after the vertical that is least saturated, because everybody's online right now. It's all about social media.
In all reality, what Lisa's dad started it in 2001 when the Diamondbacks played the Yankees in the World Series. That's when he started advertising on sports talk radio in Arizona. So he's the one that started it all. And then we picked up when Lisa took over the company, or started her own company in June of 2009. And then her and I picked up a few more radio stations from that point moving forward. So that's kind of how we got on that side of it. But the deal with radio is you have to be consistent, and you have to be ready to spend the money. It could take a year or two before you start seeing much of a return. And that's just a big nut to pay up front. And so I think that my benefit to that is that Lisa's dad started it in 2001. And when I came in 2007, it was already pretty well-oiled machine. We just kind of put it on steroids with my experience being in a call center at a big retail bank.
Right. So you guys, are you guys operating as more of a call center as a 12 per? Because I feel like you wouldn't have to, right, with 12 employees?
No, it's not. I keep saying that it's not, except you get the radio calls that come in, we take them, or you do get referrals that call in, or just relationships that we've created. But a lot of it is just through the phone. Mm-hmm. In prior to COVID, we were going out and meeting with clients. We would have a couple other team members that were going out and meeting with clients and sitting in their living rooms and going through the mortgage process with them, which obviously at some point that's a little too time consuming. You can't do enough.
It's not scalable.
Right. That obviously changed with COVID because things were just on fire at that point.
For the better, you could argue.
Well, yeah, I mean, we were kind of gearing away from that model per se, but during 2012, 13, 14, 15, it was really good because it was still pretty tight with business in general.
Right. Awesome. All right. Last question. What would you say to a brand new loan officer that wants to get into the top 50 mortgage brokers on Scotsman Guide? What would you say? What advice would you give to him or her? 3 things to kind of live by as they start their journey.
Well, I think the initial one that I think will always create the most success is treat every client like family, literally speaking. I mean, you have to. 2 would be talk to every single person that you come in contact with. Let everyone in the whole surrounding of where you're at know what you do for a profession, and continue to market that as much as you can. And then find the tech tools that are going to keep your database or keep your brand and database aligned for many years to come. I think those 3 things, if you do those 3 things, you should be pretty darn successful at that point. What
tech tools are you using?
Right now we're using Arrive. We have Sales Boomerang is really solid, especially during the refi boom stuff is mainly where it's really, really solid for. And then we have HomeBot. We are using Whiteboard as our CRM. It's transitioning into another company literally as we speak. Yeah. The CRM stuff question always comes up to everybody, but I think it's whatever one works for your model. And unfortunately, you do got to try a few out to figure out which one's going to work best for you. Mm-hmm. But those are
the biggest or best. It's about finding the right fit.
whatever one works best for you, and try to, customize it to your own business interest.
Right. Right. Awesome. Awesome. Well, Matt, thank you so much, man, for hopping on this call. It's always so cool to talk to people like you who are seeing this type of success. I mean, this is where every other, loan officer or mortgage broker, where they want to be. So it must feel really good in here. I think that's awesome. Now, I'm sure you got a lot of people looking up to you, and we're going to send this out to all of our loan officers that we have. So I really appreciate you hopping on the call. Thank you so much. And maybe I'll see you at Waste Management Open next year.
Yes, yes. We'll be back in February. Thank you very much for your kind words, and I greatly appreciate you.
Awesome. Thanks so much, man.
Have a great